Okay, dear students, let's discuss section B of pre-scene mock, June 25 FR. Section A we have discussed in the previous class, and today's target is section B, and then finally we'll go towards section C, inshallah. Let's start. In accordance with IFRS 15, revenue from contracts with customer, that's one of my favorites, IFRS 15 is one of the, I would say, my favorites. It is one of them. So in accordance with IFRS 15, revenue from contracts with customer, which two of the following criteria are required for an entity account for a contract? Okay. Let's see. In accordance with IFRS 15, revenue from contract with customer, which two of the following criteria are required for an entity to account for a contract? Let's see it. The contract must be proved in writing. The collection of consideration must be provable. The contract must have a commercial substance. The contract must be associated with the bank. Number one, contract must be associated with the bank makes no sense at all. The contract must have a commercial substance, yes. Obviously, if commercial substance is missing, it cannot fall under IFRS 15. The collection of consideration must be provable. There should be that after providing services, delivering goods, the collection of consideration should be probable. Only then you can recognize the revenue, otherwise not. So read it again. In accordance with IFRS 15, revenue from contracts with customer, which two of the following criteria are required for an entity to account for a contract? That is 2 and 3. The contract must be approved in writing, not necessary. It is very much possible the contract would be verbal if it is the custom of that particular industry. So not necessary, it has to be approved in writing. So 2 and 3. Okay. Under IFRS 15, revenue from contracts with customer, how? No, it's fine. Under IFRS 15, revenue from contracts with customer, how should the transaction price be allocated to all the performance obligation in a contract that are met over time? How to allocate the transaction price? Logically, transaction price should be allocated on the basis of standalone selling prices. Under IFRS 15, revenue from contracts with customer, how should the transaction price be allocated to all performance obligations in a contract that are met over time? Okay, let's see. Based on the net realizable value of the component, what is this? Based on net realizable value of the components at the start, date, contract, illogical. Equally spread over the entire contract of the duration, not at all. Allocate according to the total estimated cost of the components passed. Under IFRS 15, revenue from contracts customer, how should the transaction price be allocated? Why cost? Revenue should be recognized by measuring the progress completion. This is revenue from contracts with customer. How should the transaction price be allocated? All the performance obligation in a contract that are met over time. If the performance obligation is met over time, then simply you will be actually recognizing the revenue according to the progress which perform in each performance obligation you have, let's say, met. For example, if the work is 40% completed, then logically revenue should be recognized 40%. If work is 30% completed, then revenue should be recognized 30%. So delta. For the sale of high-tech medical scanner, what amount of revenue should be recognized for support plan till December X6 to the nearest dollar for the sale of high-tech medical scanner? Okay. A sale was made for a high-tech medical scanner that include a 5-year support plan. So logically, the revenue which relates to the medical scanner, that should be recognized over 5 years, because the support you will have to provided it is for 5 years. Total sale price is 2.4 million, paid on 1st March X6, and the scanner was delivered on the same day. Individually, the scanner would have typically sold for 2.1 million, and 5-year support plan ordinarily sell it for 4 lakh. First of all, we have to allocate how much of the revenue actually belongs to the support plan. Individually, scanner value is 2.1 million and support plan value is 4 lakh. Let's see, out of 2.4 million, how much transaction price actually relates to the support plan. Very simple. Total is 2.5 million, 2.1 and 0.4. We have received the total consideration, total transaction price is 2.4 million into 4 lakh. Let's see, 2.4 divided by 2.5, then into 400,000. Logically, the transaction price which relates to this support plan is 3,84,000, but I cannot recognize the entire revenue of 384 immediately because company will have to provide the support for 5 years. So logically 384 will be recognized over 5 years. How much time has been passed? Let's now count that. That is, total transaction price was 2.4 million, paid on 1st March X6. From 1st March X6 till December X6, the time period is 10 months. So simply 3,84,000 divided by 5. Why 5? Because support plan is for 5 years. 10 months have passed so far. So revenue for 10 months out of 5 years should be recognized. 3,84,000 divided by 5. Multiply by 10 upon 12. I'm getting 64,000. To the nearest dollar, so you will not be working in millions. 64,000. Great. So far, question looks pretty decent, I would say. Which of the following statement is correct regarding the warranty work undertaken on 15 September X6? Which of the following statement is correct regarding warranty work undertaken on 15 September X6? Let's see what happened. An industrial machine sold by a Bollinger company in February X6 was found to be defective, and several parts were replaced by Bollinger company under warranty. Bollinger company would typically sell the replacement parts for 1,20,000. The total cost to Bollinger company for these replacement parts was 75,000. Now listen. Actually, due to warranty, you had to bear a cost of 75,000. So logically, due to the 75,000, your cost has been increased. Let's see. The cost of sale will increase by 120. No, this is for what you sell these services. But for you, the cost is 75. It's not 120. Revenue has nothing to do with the revenue. Revenue will not be decreased actually. Whatever revenue you have recognized, it will remain there. Logically, cost of sale will increase. Simply, why would I decrease the revenue? Makes no sense at all. They are defective goods. Okay, fine. So whatever cost I have to bear on to make them correct, to rectify them. So technically that will increase my cost of sale. Okay. For the year ended December X6, match the amount that Bollinger company should recognize in the financial statement for the contract with the option to repurchase. With the option to repurchase. You are selling something with the option to repurchase. Then normally what happens when I'm selling something, just sell it unconditionally. But if you are selling it with the option to repurchase, then most of the time it is basically you are just taking a loan. That's it. I'm selling it, I'm going to repurchase. Normally I'm going to repurchase at a higher price. So whatever amount which I'll be giving over and above the initial amount which I've received, technically, number one, it is a loan as well as it's my finance cost. So basically the amount which I'm going to receive, that is loan, and amount which I'm going to give over and above the initial amount which I've received, that is my finance cost. Let's see what happened here. Bollinger Company entered into a contract for, for the sale of products for $3 lakh. Bollinger Company received 300,000 on 1st November X6. Bollinger Company has a right to repurchase these goods on 1st May X7 for 370. If this is the case, logically, whatever cash you have received, that is your loan. This is your financial liability. Okay. How much additionally you will be paying? 70,000. This 70, the amount which I'll be paying more than the loan which I've taken, that is my finance cost, but that will be recognized over time, not in day one. So 70,000 is a finance cost. If you count the time period from 1st November X6 till 1st May X7, it's a time period of 6 months. So logically, finance cost 70,000 total. I have to pay over 6 months time. So far, only 2 months have passed because from 1st November X6 till December X6. Let's see what is happening. 70,000 2 by 6. Logically, finance cost will debit and my loan will be credited. That will become a part of loan. You can say accrued finance cost. So accrued finance cost is also a loan liability. Okay. Now come here. Revenue, if you ask me revenue, I'll say 0. This is not a sale at all. It's just a financing arrangement. Revenue, cash, if you are asking me, I'll go for 3 lakh. Finance cost is 23,333 and the loan amount, liability amount. Okay. That's more clarity. If someone has recognized an accrued finance cost, so of course, accrued finance cost is your liability. If you have recognized a loan, loan is your liability. 3,23,333. So that is the first question of section B. Now let me share the question number 2. Okay, so let's discuss second question of section B. Let's zoom in a little bit. In accordance with IAS 38, IAS 30 is my favorite IAS, I'm telling you. I love this IAS 38. I love the previous ifrs 15, which we did it before that. That section A of FR, all the topics which examiner has asked in section A of FR, I love each and every topic. Every topic is my favorite topic. 38 is also my personal favorite IAS. In accordance with IAS 38 intangible asset, which of the following is the requirement for the amortization of intangible asset, excluding goodwill? Of course, we do not amortize goodwill. Irrespective of the useful life of intangible asset, should not be. What is this? Absolutely incorrect. Intangible assets should be evaluated for impairment annually without charging. No, 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 no. Actually, if an intangible asset is having indefinite life, then every year you have to go for impairment review. Either there is an indication or not. Intangible assets should be amortized according to the expected pattern of future economic benefit consumption. Logical, very true. And it is in IAS 16 as well. According to IAS 16, your depreciation method should reflect the pattern of economic benefit from the asset. The same thing applies here. Intangible assets should always be carried forward at an original cost. Simply, Charlie is the answer. Let's move. Which two of the following statements are true in accordance with IAS 38 intangible asset? Out of 4, there are 2 statements that are true. If you are unable to find out which of the out of 4 2 statements are true, then try to find out of 4 which are the 2 statements which are incorrect, false. Automatically, you will lead to that will lead to the answer. Let's see. A company must use revaluation model for intangible asset. If the revaluation model is being used for tangible, it has nothing to do with that. Tangible assets, IAS 16 is a different thing. 38 is different. So just because my property, plant and equipment, they are under revaluation model, it does not mean that I have to go for revaluation model for intangible asset. No, 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 no. Companies should revalue all material intangible asset. No, no, no. A revaluation of intangible assets should be done only if there is an active market. Yes. The initial measurement of intangible asset must be at cost. Seriously, whoever is having a good knowledge of IAS 38 could easily answer these, I would say, section B questions. Plus, whoever has seen my regular lecture should not be having any problem at all in this IAS 38. What is the total amount which will be charged to the statement of profit and loss for the year ended 31st March X7 for Project Quantum in accordance with IAS 38 intangible asset? Total amount charged. Let's see. Exilio company is conducting the following research project for March X7 Project Quantum. The project is started on 1st May X6 with a total cost 12 million evenly accrued till December X8. It means over 8 months period, over a period of 8 months time, company has incurred the total cost of 12 million. Time period is 8 months. How? From 1st May till 31st December. From 1st May till the 31st December, the time period is 8 months. So over a period of 8 months, company has incurred $12 million. On 30th July X6, the board member confirmed that the project fulfilled the capitalization criteria of IAS 38 intangible asset stop. It means that before 30th July X6, the criteria was not met. According to IAS 38, if your capitalization criteria is not met, whatever cost you have incurred before meeting the criteria of capitalizing, every cost will be expense out, which means that 12 million cost is incurred over a period of 8 months. Month of May, criteria of capitalization was not met. Month of June, it was not met. Even July, it is met at the end of July. So it means I can say the month of July, the criteria was also not met because it is met at the end of the July. So 12 upon 8 will give me the expense of 1 month multiplied by 3. First 3 months, the criteria is not met. So first 3 months, 4.5 million will have to be expense out. Okay. But don't forget, we have to go till March 31st March X7. The project was completed, started producing revenue from 1st Feb X7. The project is expected to generate revenue over the next 4 years. So examiner has given us the useful life of the intangible asset. So obviously when useful life is given, so over the useful life, we will simply amortize this. But amortization will start from 1st Feb X7, from 1st Feb X7 till 31st March. Because the project was completed and started producing, so everything starts from 1st Feb X7. So basically there will be an amortization of 2 months, month of Feb and March. 4.5 million is expense out of 12. Logically, 7.5 million is your intangible asset. This is what you have capitalized. This intangible asset will be amortized over 4 years. Amortization 7.5 divided by 4. That will give you the amortization for the entire year, but only 2 months have passed from 1st Feb till 31st March X7. So 7.5 divided by 4 multiplied by 2 upon 12. Students, I'm getting 0.3125. So 4.5 million plus this. This is total what we will charge to the income statement. 4.8125 will be charged to the income statement. Let's see. Obviously, the first one. Again, I would say an easy question so far. Classify the following as true or false for the accounting treatment of project Pinnacle and Navigo under IAS 38 intangible asset. So let's first read. Project Pinnacle. Pinnacle. The project started on 1st August. Exit cost 25,000 per month. Were spent until 28 Feb X7. When the project was cancelled, the unique equipment procured for Project Pinnacle was transferred for the usage in other research project by Exilo. That's okay. But whatever amount you have spent on research, that will be actually expense out. Let's see. Project Pinnacle cost should be treated as an expense in the statement of P&L. That's true. The specialist device procured for the Project Pinnacle should not be depreciated as it is exclusively used in the research phase. That's false. Why? If I have, for example, I have taken a specialist device for our research, for the research purposes, agreed. Assuming the useful life is 5 years, the useful life is 10 years. So logically, I'll be depreciating over the life. So I will depreciate. Project Navigo. The project began on 1st Feb X7. Costs 45,000 per month were incurred until 30th September X7. When the director increased the budget to 70,000 to expedite the project completion due to the identification of a potential buyer, 15 August X7, the success of the project was uncertain to the directors until this point. Now listen, if till this point the project success was uncertain, so whatever you have spent, it will be expense out. The expenditure incurred for project Navigo should be reported as it should be reported as an expense. So that is false. True, false, false. In the year ended 31st March X8, Exilo company incurred the following cost. 3,50,000 in personal cost to maintain a computerized list of potential customers. 3,50,000 in personal cost to maintain computerized. So basically, you're just bearing a personal cost. What the examiner is asking, according to IS 38 intangible asset, which of the following costs should be capitalized? You cannot capitalize this personnel cost. 700,000 to acquire a domain name for selling Exio company's website. Yes, domain name you will capitalize. Look at the amount, 700,000. 3.5 million for a patent to enhance the manufacturing. Yes, you will capitalize. So logically 2 and 3 will be capitalized. So that is all about the last one. Simply, okay, there's a question. Why first one we are basically why we are why we need to expense out the first one. Why? It's just a training cost of your employees. And when I'm going to provide a training to my employees, I cannot capitalize that. So this personal cost is simply take it as a training cost to your employees. So how can you capitalize it? That is why 350 will be expense out. So only 2 and 3 is capitalized. So that is the end of question 2 of your section B. Let me share the last question of section. Okay, dear students, let's quickly discuss the last question of section BFR June 25 pre-seed mock. What will be the accounting model for the measurement of 1.25 million dirham loan in accordance with IFRS 9 if you're going towards loan? So for example, I have taken the loan. So what is going to happen? Over the period of time on specific dates, I'll be paying the interest, and at maturity, I'll be paying the principal. So obviously, the most logical classification is amortized cost. And IFRS 9 is my personal favorite IFRS, I'm telling you. It's my personal favorite. Amortized cost. Carrying amount does not make any sense. Fair value through P&L. Why would I go for fair value through P&L? Fair value through P&L means that I've taken a loan for trading purposes. Come on, you have taken a loan. Would you be selling it? Illogical. Fair value through OCI. Come on. Makes no sense at all. Let me tell you one thing. When it comes to financial liability, we actually have only two classifications. One is amortized cost, another is fair value through P&L. So there is no classification of fair value through OCF for financial liabilities. So last one is absolutely incorrect. The third one is absolutely incorrect because that's not a loan which is for I've taken for a trading purposes. There's no such thing carrying amount. Amortized cost. Okay. What will be the carrying value of the foreign currency loan? Foreign currency loan at December X5, IS 21, foreign currency transaction. I love it. This is my personal favorite, I'm telling you. IS 21 is my personal favorite IS. Seriously. Now let me tell you, examiner is only asking us the foreign currency loan carrying amount on December X5. Number one, foreign currency loan is a monetary liability. Initially, you have to translate at spot rate on transaction date. Then on each SOFP date, you have to retranslate by using closing rate, and closing rate is the exchange rate on SOFP date. Let's see. And don't forget the loan plus the interest which you will be paying. That interest becomes the part of loan. Straightforward examiner is asking what will be the foreign currency loan amount on December X5. Vence obtain a loan 1.25 million dirhams with a maturity of 2 years for September X5. When the loan was taken, it's very important for September X5. We are working for December X5, so 4 months. So interest which will be accrued, that is 4 months. The loan has an interest rate 7%. Payable at the time of loan repayment. You are not paying the interest right now, you'll be paying at the time of repayment after 2 years. The loan was planned to be utilized to construct an office building, which will take 16 months to complete. The construction of the building commence on 1st September. The building will cost $600,000 to construct. Piece of land will cost. Thank you very much. Now let's go ahead. Exchange rate dirham to $1. Okay, now listen. Look at this 2.5 dirham to $1. So dirham is a weaker currency, dollar is strong currency, which means that when I'm going to convert this dirham to dollars, so whatever amount is written in the dirham in dollar, it will be less than that. So that could be only achieved by dividing it. So I'm not putting you right now in a to think for direct and indirect quotes. Simply think for which currency is strong and which is weak. If 2.5 dirhams if 2.5 dirhams they are equal to $1, dollar is a stronger currency, dirham is a weaker currency, which means that when I'm going to convert weaker currency to the stronger currency, the amount should be less than the amount which is given in the weaker currency. So obviously, if I'm going to divide the given amount in the dirham, only then I can have lower amount in dollars. Okay, fine. Simply, it's very simple. The loan amount, we know that initially we have to translate, subsequently on SOFP date we have to retranslate, but no need to do all that stuff because examiner is simply asking us, give me the loan amount at December X5. Okay. Loan in dirham is 1.25 million. What is the interest rate? 7%. So I'll calculate the interest finance cost for 4 months. So let's calculate why 4 months, because I took the loan, company took the loan on 1st September X5 from there till December. Just it's a 4 months period. 1.25 million and 7% 4 by 12. This is the interest amount 29,167. Let's add all of them. You will get a total loan in dirhams 1279167. Simply take the closing rate. Closing exchange rate is the exchange rate on SOFP date as at December X5, it is 4. So this is your SOFP loan amount in dollars, 3,19,791.75. So make it 92. Let's see. Second one. What I did, I simply calculated the loan amount in dirham till December. And then by using the closing rate, I have translated. Pure and simple. Examiner did not ask me to go for exchange gain or loss and all that stuff. Come on. So it's pretty simple. Classify the following statement as true or false. The building should be retranslated at the close. Come on. A big false. Actually, building is not a monetary asset. When building is not a monetary asset, then how can you say it should be retranslated by a closing date? Let me give you a little bit knowledge. Building is a non-monetary asset, number one. Number two, according to IAS 21, if non-monetary assets are carried at fair value, then you have to retranslate them, but whenever fair value adjustment is carried out. And it is not necessary that I'm going to carry out the fair value adjustment at the end of each reporting date, not necessary at all. You people, I think you people should have seen number of questions, even in IAS 16, obviously, where sometime we revalue during there, sometime even we revalue at the start of there. So number one, building is a non-monetary asset. Second, according to IAS 21, if non-monetary assets are carried at fair value, they will be retranslated, but whenever the fair value adjustment is carried out, not at closing rate. So false. The loan should be retranslated at the closing rate. Yes, loan is a monetary item. So you have to retranslate on each SOFP date, and on the retranslation of monetary items, whatever exchange gain or loss comes, that goes to income statement. Okay. Which two of the following scenarios will the revenue recognize over period of time? IFRS 15, my personal favorite. I told you earlier as well. With IFRS 15 revenue from contracts with customers, when do I need to recognize simply revenue over a period of time? The customer simultaneously receives and consumes all the benefits provided. Yes, yes, yes. Just an example, assuming my company runs health clubs, okay? And we take fee in advance for the whole year. But over the 12 months of period of time, we provide you the services. It's not the only equipment which we are going to provide you. Let's say we do give you the personal trainer as well, and it is included within that particular fees. So obviously slowly and gradually, when my customer is utilizing the equipment, taking the services, so simultaneously the customer is getting the benefits. So I'll recognize the revenue over time. So customer simultaneously receives and consumes the benefits. The entity's performance or accomplishment does not create resource that will be, come on. The customer has a legal right to omit the promise from the offer entity after if customer has a legal right to leave everything, how can I recognize the revenue? The entity's performance creates, enhances an asset that the customer controls as asset is created. Example, assuming there's a piece of land not owned by my company is just a construction company. So piece of land is owned by the customer has hired us for the construction. So obviously, slowly and gradually, when I'll be providing construction services, I'll be recognizing the revenue over time, because whatever asset I'm creating, basically I'm building let's say we are providing a construction to, we are building a building over there, 4 stories building, 5 stories building. Who controls that asset? Customer, not me. I do not have any alternative use of the services which I have provided. For example, the construction work is completed 25%. Assuming customer does not want to pay me, so I cannot have any alternative use of the construction work which I have already done. So at least customer will have to provide me the revenue, have to provide me the price, at least to the extent which I have given the services. So the entity's performance creates or enhance an asset that the customer controls as the asset is created. So I'll be recognizing the revenue over time. Just think for a construction contract. Okay, IAS 12 income tax is my personal favorite IAS. I love IAS 12, I'm telling you. In accordance with IAS 12 income tax, which two of the following situation will lead to non-recognition of a deferred tax asset? Deferred tax asset by an entity when there's no need to recognize deferred tax asset. Actually, deferred tax only arises from the temporary differences. There's a permanent difference. Permanent difference cannot result even a deferred tax liability. But here it is specifically being asked for the deferred tax asset. So due to permanent differences, I will never recognize any deferred tax asset. There have been a previous year of significant profitability. It's no logic at all. There's a history of, yes. Now listen, it is category. Now listen what happens. If there are losses in your business, losses multiplied by tax rate, you will have a deferred tax asset. But according to IAS 12, deferred tax asset will, due to unutilized losses, will only be recognized when your future profits are probable. Okay, means more than 50% chances are there in the future company will have the taxable profit. Then due to unutilized taxable losses, you should recognize the deferred tax asset. But it is even written in IAS 12, if there is a recent history of losses in your business, then IAS 12 says it is the sufficient evidence your business will not have the profits in the future. So do not recognize the deferred tax asset in that situation. There will be sufficient future taxable profits against which if there will be sufficient future taxable profit against which you can utilize the deferred tax asset, then you should recognize. Here examiner is asking, give me the two circumstances where you should not recognize deferred tax asset. It is A and C. So students, that was all about section B of your pre-seen mock June 25. In the next class, inshallah, we'll be discussing section C of this pre-June mock 25. Just for your knowledge, let me tell you, number one, FR at my college is available in Urdu as well as in English. Number one. Number two, each lecture is just 45 minutes long because we and my entire think tank, we believe that lectures should not be very long. Because when the lecture goes for around, I would say 1.5 hours and 2 hours, student, they lose focus, they lose interest. That is why all of the papers which ASA offers, in every paper, the lecture duration time is 40 to 45 minutes. Number one. Number two, the entire FR gets completed just within 90 lectures, 90. So it takes around only 67 hours, not more than that. Plus, then there are practice videos. So for practice videos, I would say you will be spending around another 25 to 30 hours. The job is done. If you have seen all of my lectures, including the practice videos, there's no need to do anything else. And whoever, obviously for enrolled students, they get WhatsApp support where I personally answer your queries. No teacher assistant at all. In fact, there are certain papers in which each of my lecture is just around 35 minutes long. So the point is, and plus so far, the highest marks scored by one of my students in FR, that they are 92. Let's see who is going to break that record. If I talk about FM, the highest marks, world top we have produced, highest marks are 94. Taxation, highest marks are 99. ATX, highest marks 95. At AFM, we have produced world top. And when it comes to SBR, 3 consecutive positions, highest marks in SBR are 85. So in every paper, alhamdulillah, and PM, highest marks 85. So in every paper, alhamdulillah, we have produced position holders, not in only Pakistan, all over the world. So thank you very much for watching this lecture. For any other queries, you can always ask. You can always contact me and my admin. So thank you very much.